is a cult. Thinking about it, it's a cult. It's just based around money.
So it's like social currency.
Bitcoin is worthless artificial gold.
There is risk involved, of course, but when you're talking about Bitcoin or really volatile stocks like this, I think it's no different than gambling.
When you're shown an opportunity to make money from the comfort of your home through the internet, that you can simply buy and hold digital money or trade that currency and make lots of money from it. When you consider how inflation reduces the purchasing power of your money saved in the bank, and we are presented with a better option of storing your money in digital form that we certainly appreciate as long as you buy that digital currency at the right time. When you see how people tweet about the prospects of digital money and you notice that almost everyone around you is into it. When you see real testimonies of people who made millions from it in a short time, why would you refuse?
Actually started skyrocketing, and then I was just seeing, the value of it going up by 10 grand, by 20 grand, by 30, by 50 grand, and I was like, I jumped into the shower and I was like, tell me when is that like $100,000?
Cryptocurrencies have been around since 2009. Just in case you haven't heard about cryptocurrencies, I'm sure you're familiar with the coins and tokens that follow this model. Bitcoin, for instance, worth $46,251 at the time of the recording of this video, and in June 7, 2011, it was worth $29.60. If you had just bought 10 Bitcoins in June 7, 2011, you would have spent just $296, and you'll be having $462,510 now in 2022. It's an opportunity, isn't it? It will never cross your mind to look at it deeply. But once you peel through this superficial layer of the opportunity, you realize that
And it is a form of gambling. It really is. You're going, all right, I'm going to put it in and hope that it keeps going up, but this stuff could drop just like this out of nowhere.
At a minimum, it's speculating, not investing.
It's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow.
Code this week, former PayPal CEO Bill Harris called the cryptocurrency, quote, the greatest scam in history, noting that it is a pump and dump scheme unlike anything the world has ever seen.
I thought that I was trading, but what I was really doing was gambling.
I think it's inevitably going to end in a bust, as many of the previous bubbles have around the world, and I think for many people it will end in tears.
Again, I ask you, when you see real testimonies of people who made millions from it in a short time, and you've noticed that almost everyone around you is into cryptocurrency, why would you refuse? Pay attention to this now. When the game of cryptocurrency is presented to you, it will not reveal itself to you as such. It will come disguised as a way to
turn your portfolio into a millionaire maker.
Disguised as a way to
make all of us rich if we all work together and promote this coin.
When it presents itself to you, it will not come as a scary monster with claws and sharp teeth. It will come as a life-changing opportunity, your chance of making money with little effort. It will bring you hope and every good thing you can imagine. It will come disguised as anything but that which it truly is. The next two parts of this video is a simulation for the common and collective experience of many crypto traders and investors. There may be differences in experiences among individual traders, but the overall structure remains the same on average. We will look into the details later and how this simulation is a typical model for the experience of most crypto traders and investors. But for now, buckle up your seatbelts. This is how it all begins. You start seeing different posts, hype, and updates on cryptocurrency on different social media platforms. On Twitter, you see popular tweets from crypto enthusiasts and businessmen like Elon Musk, all promoting cryptocurrencies. The statuses of your friends on Facebook promote the trends on crypto. On WhatsApp and Instagram, almost everyone is talking about going to the moon and pumps. You see posts of people literally quadrupling their money in a matter of weeks. You may also come across some crypto-based pyramid schemes and other get-rich-quick schemes that use cryptocurrencies. The social media platform doesn't matter. They all carry the same message: the prospect of making money from the internet. the freedom from decentralized control of financial systems by the government through banks, the future of finance. The whole new idea seems promising and harmless on the surface, but you still have some doubts. You ask questions, you surf the internet, and get as many information as you can on cryptocurrencies. YouTube has it all, you say. You search YouTube on cryptocurrencies, and what you see gives you more positive energy on crypto. The thumbnails alone are so captivating that you can imagine making $50,000 from $100 in a year. You see titles and thumbnails like $1,000 per day, how I made millions by cryptocurrency, turned $1 into $5,000. As soon as you watch few videos on YouTube, you are fired up with dreams, hope and motivation. The YouTubers charm you with their words and their boldness.
In this video, I'm going to show you a strategy that could help you make money in crypto.
100 million, $1 billion market cap. I mean, the moon is the limit here.
You hear those phrases again. Making a lot of money, going to the moon. Then you're told that what gives crypto its worth is demand and supply, just like every other market. You see the current prices of some coins and tokens and you wish you had bought them a few years back. If you did, you'd have become a millionaire now. You see the news about how the government of some countries place restrictions on crypto, and your passion for crypto deepens because the government now appears to be your enemy of progress. You browse through the profile of some of your friends and you see posts on crypto potentials, few posts on their profits and losses, market trends and so on. Those phrases reappear, making a lot of money, going to the moon, pump. The whole thing is enticing, it gives you hope, and you decide to join the cryptoverse by investing in crypto.
What are your 3 altcoins you predict right now to skyrocket in the future? Ethereum, obviously Ethereum. Price target for Ethereum? Ethereum, well over 25,000.
With the information you've been able to gather from friends, blogs, YouTube videos and popular tweets, you choose 3 cryptocurrencies you want to buy. You download a wallet, sign up an account and purchase these cryptocurrencies. The providers of the information that influence your choice of crypto portfolio all say that their advice is not a financial advice.
And I'm not your financial advisor.
For the viewers at home, nothing that we talk about here on this page is financial advice.
Yet, you follow their quote, non-financial advice. You notice that the market is extremely volatile. Sometimes you make profit, sometimes you lose money. For each loss you make, you blame yourself for it. It's because you are impatient, you entered the market at the wrong time, you took the wrong position, you couldn't control your greed, and so on. You hope to learn lessons from your mistakes and try again. Of course, every day is not Christmas, you tell yourself. At some point, you feel there is more to cryptocurrencies than just investing based on what people say. You make your research and inquiries, or perhaps you sign up for classes or tutorials on crypto trading. You come across terms like technical analysis. This is simply a method of analyzing charts involving the use of indicators based on previous price action data to try to predict the future movement in price. The basic idea is that markets behave according to a certain pattern, and once it's established, trends heading in certain directions often continue along the same course for some time. You learn about price action and continuous trend candlestick patterns like mat-hold candlestick pattern, rising 3 method, ascending triangle, and so on. Reversible trend candlestick patterns like bullish Haramai pattern, bullish morning star, inverted hammer. Indicators like MACD, Bollinger, EMA, and so on. Other books and blogs. The list goes on. You learn crypto slangs and acronyms like FOMO, fear of missing out, DYOR, do your own research, HODL, hold on for your dear life, and lots more. After gathering so much knowledge, you feel like you're part of something big. Fresh stream of motivation and hope fills your head. Trading seems to be easy now. You are officially a crypto trader. You embark into crypto trading. At some point, you also find other crypto enthusiasts like you, people of like minds, and you form a team. Or you probably sign up for a service where you pay to receive trading signals. Your trading life continues. Sometimes you make some profits, other times you make losses. For each loss you make, it's your fault. You didn't go through the news. You were not patient enough. BTC dominance, wrong entry, FOMO, and so on. Whatever it is, you find a reason to explain your loss, and you justify the significance of your loss. You continue to trade. Some days you're excited, other days you are very depressed. You try to learn more and more things on YouTube and books. Tweets about the prospects of the crypto space encourage you. Men like Elon Musk, Vitalik, and Changpeng Zhao. At some point, you feel something is off, but hope keeps you going. After all, everyone says cryptocurrency is the future. To compensate for your losses, you decide to start your own tutorial on crypto in exchange for a fee. Your confidence is back. You go to trade again. You make some profits. You get excited. You trade again. You make some losses. You find reasons to explain your losses. You justify your losses. You trade again. You gain or lose. The whole cycle continues. Then, you realize that days and weeks slip through your life because of this pattern. That feeling that something is wrong somewhere pops up again. You go through the months or years you've spent in crypto trading and realize that, like a hamster running on a wheel, you've been putting in so much effort, time, and money into crypto, but you are still on one spot. Bank statements and account balance reveal that not much have changed within these months and years. Your crypto portfolio is almost the same since you started. Like a pendulum going back and forth about a fixed point, you're making profits and losses, yet no real progress. You may have actually made more losses than profits all these years, but you never really realized it until now. Questions flow into your head and you start to wonder, when you lose money, where exactly does it go to? When you make profits, where precisely does this come from? Why is the market extremely volatile with high degree of unpredictability? Who are those making it here in the cryptoverse? These are deep questions, but then this feeling has been there from the start, as if there was something about cryptocurrencies that had been hidden from you, as though the truth about the whole thing had been concealed from you. And you'll be right. You see, before you started investing and trading cryptocurrencies, there were some critical details you should have understood about what you were about to get yourself into. Pay close attention now, because it's about time you find out exactly what these details were. There are different kinds of cryptocurrencies, some of them having their own use cases. The overall structure of cryptocurrencies remain the same. Cryptocurrency is money that exists in the internet, just as your banknotes or fiat currencies are stored in bank accounts, and you have bank details that you can send to anyone to receive money from them. Cryptocurrencies are stored in wallets, and we have crypto addresses, a set of codes you can share to anyone to receive crypto from them. Fiat currencies derive their worth from the government through central banks. The central banks centralize and control the value of money, but cryptocurrencies are democratized or decentralized. Their worth is determined by the people buying, selling, and holding it. Each cryptocurrency is built upon an individual foundation called blockchain. The cryptocurrency itself isn't the blockchain. Ethereum blockchain has the cryptocurrency Ether. Cardano blockchain has the cryptocurrency ADA, and so on. It is the blockchain that provides the use cases of some coins and tokens. For example, Ethereum can be used to create and execute smart contracts. However, when you attempt to trade Ethereum, what you actually trade is its currency, Ether, and not the blockchain. The blockchain simply records the transaction. It sounds just fine, so why the controversy? Apart from stablecoins like USDT and BUSD, cryptocurrencies have a lot in common. Their worth or price is driven by funds. People all over the world buy and sell cryptocurrencies every minute. When more money is put into a coin than is removed from it, the price goes up. When more money is removed from a token than is put into it, the price goes down. Thus, it's a fight between buyers and sellers. Funds are added or removed from the market on pure speculation and sentiments of the people. Unlike stocks, which are actual companies that have products or services they sell, a cryptocurrency doesn't generate revenue on its own. It depends on the people's funds to rise in price. So, it's a pool of funds, right? Don't worry, we'll get to that. According to Bitcoinist report, 90% of people who invest and trade cryptocurrencies are men. The prospects of cryptocurrencies appeal to those who are tech savvy, those struggling financially, those who hate employed jobs and want to become entrepreneurs, those young and inexperienced enough to be engulfed by the idea of making much money in a short time with just your phone. The controversies surrounding cryptocurrencies are endless.
And the industry wants you to hear all about the highs, tempting potential investors to get on board. It's the classic get-rich-quick script.
I feel like it's a Ponzi scheme in many ways, where people are encouraged to put money in, and those at the top who know what they're doing will take that money away at the top of the pile and leave everybody else scrambling around.
The world richest investor and the fifth world richest man at the point of recording this video, Warren Buffett, is also a financial educator. Unlike Elon Musk, the number one world richest man and innovator, who owns companies and business systems and has insights in running companies, Warren Buffett has been an investor in stocks and companies, and he has more insights when it comes to investing and trading. Hear what he says about cryptocurrencies.
If you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. And I got to hope next time you get more excited after I bought it from you, and then I'm sitting there. Now we got to find somebody else, and they come to an end. I mean, those.
That's a greater fool theory. That's what you're saying.
Well, yeah, it's.
So, is cryptocurrency a flat-out scam? Why all the hype on certain coins and tokens? How is cryptocurrency different from stocks? There is a widely publicized statistics that about 95% of crypto traders lose money and about 5% make money. So, who are these lucky gainers? We'll get to that. First, I'll show you exactly how price action of cryptocurrencies work. It is said that demand and supply causes fluctuation in the prices of cryptocurrencies. The term demand and supply is just a jargon. When people put more funds into a particular coin, the price goes up. And when more funds are removed from a coin, the price plummets. If you buy $1,000 worth of Bitcoin, for instance, at the Bitcoin price of $35,000 and the price goes up to $45,000, it's because more people purchased the Bitcoin after you did. And your $1,000 would become approximately $1,286. So you have a profit of $286 on your initial investments of $1,000. If you withdraw your money at this point, you are withdrawing your initial capital plus a fraction of the money of others who bought Bitcoin after you. Since you're the one making profits, it sounds just fine, right? What if you buy $1,000 worth of Bitcoin at a Bitcoin price of $35,000? Then the price of Bitcoin drops to $25,000. You lose $286 from your $1,000. It's because more people withdrew their money after you bought it. In fact, the money you put in helped to raise the price of Bitcoin to their advantage. And now they withdrew their initial capital plus a fraction of your own money, along with the money of those who bought Bitcoin before they did. Now you see what actually happens. There is no true perfect entry into the market except you created the token. Any point you choose to enter the market, the majority may choose to buy to your credit or sell to your loss. Your technical analysis has a negligible impact on the market. Most people buying crypto don't intend to use the blockchain, but they intend to sell it to someone who hopes to sell it to some people who hope to sell it to some other people, and it goes on. At the end, some people would lose money in exchange for nothing to the credit of others. This is called the greater fool theory. According to Investopedia, the greater fool theory states that you can make money by buying overvalued securities because there will be usually someone that is a greater fool who is willing to pay for it at a higher price. Cryptocurrencies have no real worth or use. Those with use cases are actually used by just a negligible amount of the world's population. For instance, most people buy Ether not to use it to execute smart contracts, but to sell it at a higher price at the expense of the funds of others. Cryptocurrencies are different from real commodities. For instance, you can buy 20 barrels of palm oil when it's abundant at a cheap price and sell it at a higher price when palm oil becomes scarce. Now, anybody buying palm oil from you at a higher price does not hope to sell it to someone again. He or she is buying it because he wants to use it probably to produce soap in his factory or to cook in his restaurant. The difference between palm oil and crypto is utility. Palm oil has huge utility. Secondly, the price is not determined by the number of people buying it, but by its availability. Let's consider gold. Gold fairly maintains its value because of its cross-functional utility. though it tends to rise as investors buy it during recession. Gold is used as in currency, luxury items, electronics, electrical wiring, dentistry, medicine, radiation shield, and to color glass. Let's consider stocks too. Stocks have value because of their earning potential and what they can return for their owners. They're legitimate companies with fiscal assets that are expected to return a profit. Cryptocurrencies have no intrinsic usefulness because they are not backed by assets or business systems like stocks. Most of the value of crypto is based on hype. That's not all. There is a side of crypto trading called futures trading or derivatives. Here you can multiply your risks through leverage. You are lent some tokens to trade with according to your leverage. If a coin rises by 10% and you use times 10 as your leverage, you get 100% profit. If it depreciates by 6%, you lose 60%. There is also a price called liquidation price. Once the value of your coin depreciates up to this liquidation price, you lose all your assets you put into that trade. Risky, right? Now, there are people who trade coins on futures. When they get liquidated, the money they lose doesn't vanish in thin air. No, it is added to the market and it further pumps the price. When some people's stop losses have been hit, they get kicked out of the market with the losses. The funds lost is also used to pump the price of the coin. Therefore, your loss is someone's profit and vice versa. You can say that crypto trading is a zero-sum game. This is a situation in which one person or party can win something only when another person or party loses. So the net change in wealth or benefit is zero. For every winner, there is a loser. Now you know where your money goes to and where your profits come from. It's a zero-sum game. One person's gain depends on the losses of the others. In crypto trading, everything is based on pure speculation. You have no control over the market. There is more. Most crypto influencers on YouTube make the whole thing seem very easy and harmless. They tell you what you want to hear so that you can click on the affiliate links in the description and they get paid for it. Yet, after giving you advice, they say it's not a financial advice.
After all, I'm not a financial advisor.
Most of them do this to make their obvious advice unfalsifiable. If you follow their advice and it doesn't go well for you, it's not their fault but yours. In addition to this, many crypto influencers on YouTube are actually scammers. They create a scam token or are paid to promote it. Anyone can make their own blockchain ledger and token and promote it. Once people buy it, they sell off at the top and the coin dumps, and they get away with it. But stocks must be cleared by the government agencies and audited when they are created. Any pump and dump projects lands the creators in jail.
If I told you there's a project guaranteed to increase in price, I'm sure the first thought you would have would be, wait a second, that doesn't sound right. Well, this is where we get into the complicated gray areas of decentralized finance.
A project guaranteed to go up in price? Let's see the price of PAM token today on CoinMarketCap. This project is featured as on tracked listing. Now let's see what it was a few months back. What the hell? After a bull run in July, look at where it is now. Zero level. A pure pump and dump scheme. Now look, by November it's below 80 cents and it depreciated more afterwards. This is sickening. He went on to say, I'm not a financial advisor. What a deception.
This could make all of us rich if we all work together and promote this coin. I don't see how we cannot be rich.
A coin that can make all of us rich. That's a red flag.
What if, for example, earlier than that, I wanted to try to pull a stunt like that, some exit scam? Well, you have to think about, would I be willing to put my reputation on the line?
Now he's trying to manipulate people into trusting him using his reputation as a bait. This whole thing is crazy. From everything we've seen so far, considering the greater food theory and zero-sum game in cryptoverse, investing and trading cryptocurrency is a calculated gamble. Your loss leads to the profit of some other traders. The opposite is true too. One thing with gambling is that the uncertainty and unpredictability gives you hope and keeps you hooked in. You've made profits before and you've lost money too, and so you don't know what will happen next, and so you hope to make profits. The volatility is thrilling and you enjoy checking your trades over 7 times a day. You keep putting in your money into the market no matter how much you've been losing. Hope leads to your addiction. This is called intermittent reinforcement. This is the delivery of a reward at irregular intervals, a method that has been determined to yield the greatest effort from the subject. The subject doesn't receive a reward each time they perform a desired behavior or according to any fixed schedule, but at random and unpredictable intervals. This is how some online games and gambles are designed to make you addicted. Sometimes you are rewarded with wins or entertainment, other times it's just too difficult to play. You don't know what will happen next, and you receive enough rewards at sufficiently sustainable but irregular intervals to encourage you to continue. This is the exact same way cryptocurrencies get you hooked in. Other times, you are hooked in because you hope to recover your losses from the market. Trust me, you haven't seen anything yet. You wanna know those who are making it here? In October and November 2021, Shiba Inu witnessed a pump reaching $20 billion market cap, and just 8 whales controlled 70.52% of the market. With a single tweet, Elon Musk has been manipulating the crypto market, especially with Dogecoin, through sentiments. What most of the whales do is that they buy tokens when it's new or extremely cheap, then they promote the token, and those who buy afterwards feed the whales. Trading is about feeding the whales. They intentionally give you this us versus them mentality by making the government and the banks a common enemy. They hype tokens and give you hope of a better future in the crypto space. I'm not trying to defend the government. The banks and government have their own flaws actually. What I'm trying to do is to show you how these whales take advantage of the flaws of the government and banks to exploit you. The use of certain terms and acronyms like pump, mooning, huddle, and so on gives you a sense of belonging and uniqueness, like you're part of something big. Every group or cult has their own language or slangs that give their members a sense of uniqueness and belonging. This is exactly what the whales are doing to you. They give you the illusion that you're part of a big vision. This culture around cryptocurrency is part of their appeal. It is said that Satoshi Nakamoto has 1 million bitcoins, which means he should be having a net worth of about 46 billion at the point of recording this video, and when the price of bitcoin reaches $263,000, he will become the richest man in the world. Who is gonna make him rich? You. Unlike Elon Musk, who created a company that solves problems and is rewarded for it, Nakamoto will become the world's richest man by simply holding bitcoin and milking you in exchange for nothing at all. Am I being extremely harsh about cryptocurrencies? I can't speak about all the coins and tokens in existence. I just pointed out the key flaws they all have in common. I'm not saying you should never trade, no. If you want to trade or invest in cryptocurrencies, then do your due diligence. Examine yourself and your intentions. If you want to make a lot of money in a short while, tread carefully. Chances are you will lose a lot of money in the crypto space. If you must trade or invest, understand and take cryptocurrencies as a zero-sum game and a calculated gamble it truly is. And unlike assets and commodities with final consumers, crypto lands in the hands of greater fools at last. I don't think it's wise to try to make a profession out of a gamble. Take it as a game, it truly is, with the amount of money you can afford to lose. The huge profits are real, and the heavy losses are real too. You can make profits, but considering the statistics of about 95% losers, your chances of making losses are higher. There should also be a time when you must stop trading, especially when you have made profits. If you're able to increase your portfolio by 3 to 6 times in a year, you can back out of the market for a couple of months or years. If doing any of these is difficult for you, you can back out from the cryptoverse completely and do something more worthwhile with your life. Make your decisions according to what seems best to you. Always remember, people who are desperate to be rich fall into many traps that plunge them into ruin. Desperation for money brings trouble and nothing but trouble. Going down that path, some lose sight of their purpose in life and live to regret it bitterly. You have made it to the end of this video. Before you click off, I truly want to express my gratitude. Thank you for watching to the end. If you are new to this channel, you're welcome. I'm Mr. Kizzitoezennaya, and I make documentary style videos on topics of love, relationship, marriage, business, finance, spirituality, influence, and life in general. If that sounds like something you're interested in, please hit the subscribe button. And if you liked this video, please hit the like button because it helps to get pushed by YouTube algorithm. You can also help me share this video to many crypto traders you know. They need to know the truth revealed in this video. And just in case you need graphic design for your businesses, brands, events, I want to introduce you to my graphic design team. They create the thumbnails I use for my videos. They make amazing designs at affordable prices. You can reach out to any of them through the WhatsApp links in the description below to get any graphic design at a cheap price. With that being said, my beloved friends, I hope you have a wonderful rest of the day. One love.